I'm not even sure the name
All
of it.
right. I think we're live, Press.
Yes, we are. Hey, Blue for real.
All right. How are you today?
I'm great. How are you?
Pretty good. Just
Before
the
we get started, I just want to reveal my blooper reel. I went live on Friday, and
okay.
what is that?
What's the matter?
I'm not sure. I'm getting feedback from somewhere.
Did you find it? You have another tab open that's playing?
I'm checking now.
Okay. Well, guys, I just want to give you guys a heads up. I think as of next Sunday, our Sunday show will be changing time. So please check out our community walls for an update on it, as well as having the notification bell on. I usually try to post the live at least 1 or 2 days ahead of time. Um, and today's topic, we're going to be going over a few stocks on how to evaluate stocks for to see if you want to add them to your portfolio. So we're going to look at a few key points, including the price, the 52-week high, dividend yield, performance, and then we have some points on how to let's see the tools that we use on a regular basis in order to evaluate companies and do our research. So, Prez, did you find out what's going on over there?
Yes, I'm the guilty culprit. I had a whole tab open.
Okay, okay. You found it?
Hmm.
All right. Anything else you want to give before we get started? As far as I just did you hear what I was saying about check for an update as to what time our show will be going forward?
Hmm.
Anything else?
That's about it. I think you covered everything.
Okay. All right. So last week I threw it out there, and some of the channel members gave us some stocks that we're going to take a look at. And I know on Monday you did put out a separate video and you
Hmm.
covered Visa during one of your lives. So check that out if you guys are interested in what's going on with Visa. That was from last week Monday, but I think it was Joe that asked for that particular company last week. But we're going to get started with first up is going to be Walmart. So, Prez, you want to run through the matrix, or how do you want to go about starting to share this? So we're going to go through a
Um,
few companies, and basically, yeah, give your spiel on how we're going to be looking at this.
I just basically want to explain the key metrics that I look at, the main key metrics that I look at when I'm evaluating a individual company. It helps me determine whether this company is still profitable or does this company pay a dividend or what have you. And it also helps me try to gauge the potential growth of this company as far as share appreciation is concerned.
Okay, all right. So you got to let me know how you want me to go about. Are you ready to start sharing the slides, or what's up?
Yeah.
Yeah.
So for
Okay.
example, let's take Walmart. So say I'm interested in investing in a Walmart. We all know what Walmart does. We all know the company, so there's no need to go into a company description. We already know what Walmart does. So for the first thing I look at is the current share price. And do you have the slide for that? Yeah, I look at the current share price, and my main concerns on this particular page you see here is the 52-week high, the 52-week low, the dividend yield, and the total dividend. Everything else is pretty much irrelevant on this particular app. I use multiple apps to help me look at an individual company. And this is more user friendly as far as those key metrics that I just mentioned. So this is the only thing that I use this particular app for as far as evaluating the company. I need the 52-week high, the 52-week low. It's easy for me to read, as you can see. It's pretty large. Looking at it on your phone. This is a screenshot from the phone, and then I go
And
on to a
sorry,
different
Prez.
app. Go
This
ahead.
this is the Moo Investing app. I don't think you're saying the name of the app. So
No, this
this.
is actually Webull. Webull.
Oh, I'm sorry. This is Weeble. Okay.
Yes.
All right.
And the next slide is actually Mumu. I will shift over to the Mumu app and look at the dividend history. It gives you more than this, but I normally look at the previous three to determine if the dividend has been increasing over time, or is it a pretty steady dividend, or is it, for example, 80 cent 1 month and then 20 cent a month after that, and then it's 75 cent a month after that. I'm pretty much looking to see if it's a pretty consistent dividend and how often I'm going to be expecting to receive this dividend.
Okay.
Once I determine that, then I would go on to what's the next slide? I can't remember. The price to earnings ratio. This lets me know if the company is pretty much overvalued or undervalued. In the middle, where you see right under where you see historical distribution, I would look at the industry average, which is currently at 39.03. And then I would look at the current price to earnings ratio of this particular company and compare it. How close is it to the industry average? As you can see, it's slightly above, so I would consider this almost fair value, or you can argue it's slightly overvalued because it's slightly above the current industry average. So that lets me know here, and this is a better example. Same thing, it's just a better example. You can see the bar graph side by side, and that lets me know if I would like to purchase this at a lower price or the current price. If I do buy it at the current price, I'm expecting it to come down lower. I won't be afraid or surprised if I see the share price to dramatically drop. And based on the company that it is, then I can ask myself, how would I feel if this company was down 20% year to date? And that determines how much of this company I would like to own in one said portfolio.
Okay. So this is the last image I have for Walmart.
And
So
this is the overall 5-year percentage. When in doubt, they always tell you to zoom out. So if you in doubt of the performance, the share appreciation potential of the company, even though this is past results and it can't guarantee, future, but you can pretty much guess and see that this company has been growing over time. As we can see, it's up 103.23% over the past 5 years.
okay, so Walmart. So overall, I would say Walmart is a company that, obviously a legacy company. All the
Mhm.
companies that we happen to have chosen for this particular show. Maybe another time we could do some of those things that maybe most people have not heard of yet. But everything that we're going to talk about, I think you're going to know. Probably know, use, love. uh,
Mhm.
uh, but overall, 25 years ago, Walmart was at the top of the S&P. Now it's, down in the 20s. Still a company that has potential, but lower growth versus the tech industry. But if you want retail exposure, it's still a strong contender. Do you agree, Press?
I agree. I totally agree.
And it has been paying its dividend for over 50 years, making it a popular choice for dividend focused investors. So, and I think Walmart, we all know Amazon is our go-to for getting our fast e-commerce delivery, but I think Walmart has definitely been trying to keep up with the changing trends and be able to compete in that arena of e-commerce growth as well as grocery and stuff like that. And I think both Prez and I wish we had Walmart in our portfolio. I wish I had chosen Walmart over Target. I think you wish you had chosen Walmart over, was it Home Depot?
Home Depot, correct, correct.
So I know I was listening to someone's video recently and they were talking, someone made a comment about, those olds who wants to hear about Apple and Amazon, or I think they would probably say this, that Walmart, it's an old company, but I'm okay with having some of these. I don't need to have a portfolio full of the newest thing that I think will be the next best thing years to come. I'm okay with having some of these legacy established, that's been around for a generation
Forever.
in my portfolio. All right. So
On
you ready
top
to
of that, on top of that, another reason why I like to invest in the companies like this, for example, I chose Home Depot instead of Walmart. I wish I didn't. It's because I don't want to have a whole bunch of technology companies inside of my portfolio. All it takes is for one of those main technology companies to report bad earnings, or they have a negative news catalyst or something like that, a data breach, Lord forbid, and it can potentially pull down your entire portfolio because you put all of your money into the technology sector versus trying to diversify, as well as having a good sound ETF being the base of your portfolio. So I look at other companies like the energy sector, the retail sector, consumer discretionary sector, to try to give myself a lot more balance in my portfolio and diversity.
Okay, all right. So now we're going to move on to our next stock, which is Apple.
Apple, same goes for Apple. On this particular screenshot you see here, I look at the current share price, the 52-week high, then I look at the 52-week low. I'm going straight down the middle here, the middle column that you see. I skip over a couple, then I go straight down the dividend yield, which is almost at the bottom, the third column up from the bottom, and then I look at the total annual dividend. And then that's when I go in to determine, well, how often does this company pay dividends? And without me having to use a calculator, I look at the dividend history, and it will pretty much give me an estimate on per however many shares that I own, how much I should be expecting each dividend payout date.
Okay. Next up is the dividends.
As you can see here, on August the 25th, 2024, if let's say you would have owned 100 shares, you would have got 25 cents per share, and so forth. Even if you own a fractional share, that's when you would really need to either wait for the notification to come through to let you know how much that dividend payout was for, or simply try to use your calculator and do the math and divide it by that fractional share, which I don't really like doing. So I just wait for the dividend payment to hit my account, and I look at it from there. It may be 5 cents, it may be 2 cents, it may be 13 cents, depending on how much of a fractional share that you own. But you do receive some sort of dividend for fractional shares in a dividend payout company. And looking at the current price to earnings ratio, Apple is just about, it's slightly overvalued, but you can argue it's at fair value because it's really in line with the industry average. So it's pretty at a fair value price, but we like to buy low and potentially sell high, but I wouldn't even be selling Apple. I would be holding on to Apple probably forever.
Okay. And yeah, the PE ratio, Prez pulled that from the Moo Investing app. And yeah, I love
Hmm.
that it shows you in this kind of format. One
Yeah.
of my, yeah.
Another reason why it's good to use multiple platforms, even if you don't necessarily even have to own stocks on each and every platform. At least use the different tools to your advantage. It's like you collecting all these different tools from Advanced Auto and AutoZone and your Napa Auto. You know, understand? I use that analogy because I'm using these different apps as for different tools, and I don't have to pay an arm and a leg for a subscription for this elite data and stuff like that. I can get a lot of this stuff for free just by downloading the app and having an account with them.
Hmm. Did you pull this from public?
Yes. So that's actually three different apps that I use just to look at a particular company. And
Yeah.
it's easy for me to see it versus me looking at the Weibo desktop. Not everyone knows how to read candlesticks. It may look a little bit confusing to you looking at candlestick charts because you've never seen them before. So it's a lot easier for even a third grader to see that this company has been performing well over the past 5 years.
Yeah.
So
Yeah.
it's really no excuse. It's really no excuse. Now I gotta lean on the ones that are not currently investing, or they making an excuse like it's too hard, it's a lot to learn. It's really that simple.
Okay. Yeah, and if it is hard, if you still think that this is hard, there is VTI.
Hmm.
so so let's move on. Well, let's take a quick break. I'm going to put the next investment up, which is going to be Oracle. But I just want to say thank you for everyone who is tuning in the chat. Um, and is there any particular question or anything that's going on in the chat? Let me see. I have not been looking at the chat.
I
So
didn't
we
either.
got started.
I truly apologize. Hello to everyone that are tuning in. Hopefully everyone hit the like button. It's still free 99.
Yes, please do. Please do. If you have not already. Thank you, Vinny, Pipeline, Sheed, everyone that's in the chat. Hey there, Joe. I see you. Fast Eddie, Realist. Let's see.
I see a question, drip on or off?
For me,
That's
it's
totally
on.
up to you. Most people say leave the drip on, but my personal preference, I like to reallocate my dividends as they come in to where I see fit so that the drip doesn't potentially pull my portfolio off balance. Now, I could be wrong. That's just a chance that I'm willing to take. But I see a lot of people will recommend that you have your drip on. So it's really up to your own personal preference. Me personally, I'm going against the grain and taking a chance on that versus listening to everyone else and, having my drip turned on. Not that I see anything wrong with it, but that's my sole reason. I would much rather reallocate those dividends elsewhere. It's not like I'm trying to withdraw them or anything like that. I just simply like to reallocate those dividends on my own where I see fit.
Yeah, I don't know what this comment is from Joe.
Forever,
Is
ever
about.
talking about Apple. Forever,
Oh,
ever.
okay. Thank you for
I got
interrupting
you,
me.
Lisa. I got you. I
Thank
got
you.
you.
Thank you, Prez. Thank you. Thank you for keeping me up on what's going on. I don't think I said hello to Prez. I mean, to Bronze. Thank you for tuning in. Let's see. Stock Davids has Walmart in his portfolio. Stock David has a nice portfolio going on over there. All right. So now on to Oracle.
Same goes. The same routine. I
Oh,
look at the
let me just say about Apple. You guys, I think if you've been here before, you probably know I am a fan of Apple stock, and I think that they're still going forward. Like, yeah, it's an old company, it's an older company, but I think there's still a high investor confidence and demand for the iPhone and the products and the ecosystem that they have built with the Apple Watch and the MacBooks. And I mean, I've been using the Mac Mini computer in order to edit lately. I am a fan, and I can see, you know, despite slowing sales, it's something that I'm not disappointed that I have in my portfolio. And like I said, I'm not all about the newest. I'm not one to. I want investments that I know don't necessarily have to change out continuously every couple of years. And
mhm,
I've been okay with holding Apple long term, and I will continue going forward. I have no
mhm.
plans on cutting it or anything like that. So on to Oracle.
Now Oracle is also a technology company. I have to do a lot more research as to understanding what they actually do. So I didn't get a chance to, get the artificial intelligence to teach me what they actually are into. But it's looking as if they are a software company, and a lot of other companies help deal with them because they help them process their data, and they do pay a dividend, so that's a good thing. And as far as the dividend history, I believe this pays out every 3 months. Let me see that slide, please, Miss Lisa. Dividend history. Yes, it's looking as if this is every 3 months. About 40 cents per share, which is a pretty good dividend considering the current share price, which is $170. So it's a pretty good dividend payout per share. I just need to learn more about this company. So therefore, I probably wouldn't own it because I don't know much about the company. Still looks like a pretty good company. Can I please see the price to earnings ratio? And as we can see, this company is overvalued. The current price to earnings ratio is 44. The industry average sits at about 36. So yeah, if I was to know more about this company and was that inclined to want to invest into it, I would be looking to enter into this investment at a much lower price, possibly off of a earnings report miss or a negative news catalyst or something like that. I would be looking to enter because based off of the 5 year performance, this company has been performing fairly well, currently up a 205% over the past 5 years. So I wouldn't say it's a bad company. It looks like a pretty solid company. I just don't know much about it, so I would need to learn before I would be more interested in investing into it long term.
Yeah, another, like I said, all the companies that we happen to have chosen for today's show are, legacy, long time, well established companies. And this one is currently competing in the cloud services for Amazon and Microsoft, more names that we've heard of. So they're trying to be a contender out there when it comes to cloud infrastructure. So there is still some room for growth with this company, but you're going to have to there's different things that you'll have to evaluate when you decide on your goal in your portfolio. Is it growth potential? Is it income? Is it stability? And then from there, you'll have to decide whether you want to go with a company that you've heard about for, as long as you could think back. You've always heard of this company, or if you want to go and try to find that um, newcomer that you think has more growth potential than some of the companies that we're looking at today.
Hmm.
Now on to what's next. Let's see. Coca-Cola. I think Nora might have asked for this one. Are you there, Press?
Yeah, I'm here. Can you hear me?
Yeah.
Coca-Cola. I also look at the 52-week high, the 52-week low. I look at the dividend yield, which is currently at 2.76. Pretty nice dividend compared to the current share price. And that's a grand total of $1.94 per year. You would simply divide that by 4 because Coca-Cola, from my understanding, does pay a quarterly dividend. So that's every 3 months. And that is about 48 cents per share. And their next payment, well, their previous payment date was October the 1st, 2024. Before that was July, and before that was April. So a pretty consistent dividend. And we all know that Coca-Cola, well, if you didn't know, now you know that Coca-Cola is considered a dividend king. They've consistently increased their dividend over the past 25 years or more.
Yeah, their dividend's been growing for 61 years, according to what I have here in my notes. So, yeah,
Yeah, I believe
definitely.
that's Dividend Aristocrat, if I'm not mistaken.
Hmm.
And their
Yes.
current price to earnings ratio, they are slightly overvalued. However, me personally, I do currently own Coca-Cola long term. I just buy it when it's as long as it's allocated in my portfolio properly. I just buy it when the time comes. The price doesn't matter to me. It is slightly overvalued, so if you were interested, I would personally wait for a slight pullback, but that's a chance that you have to decide to take whether you want to enter now or whether you want to wait for it to have a pullback or a potential earnings miss or anything like that. You could end up missing out, or you take the chance now and enter into it now, and just don't be alarmed when it does pull back. That's your chance to buy the dip.
Okay. Yeah. So this is the type of company when I think of brand loyalty and just overall like market confidence from the
Hmm.
consumers. Yeah. My whole life, this is a brand that we all know. So,
Right.
but
How about the
having the
5 year performance? How we been looking on Coca-Cola? Currently up 28.27% over the past 5 years. So you don't expect a whole lot of growth and share appreciation when it comes to Coca-Cola, but you do get some, and you are getting that nice dividend, and the share price is pretty low. So it's much easier for you to accumulate more shares if you're newer a newer investor or you're investing on a lower budget.
Mhm. Yeah. Let's see. What do we have
I saw a
next?
question in the chat about VTI before we go into Berkshire. As far as waiting for a pullback with BTI, no, I personally not. I wouldn't. I'd buy it at any price. I don't care. It's gonna consistently go up, so I would just buy it on a regular basis. Maybe it's $5 a day, $10 a day, $20 a week. However you scale it to according to your own personal budget. But you already know the more you invest over time, the less time it will take for that compound interest to start working in your favor as far as the snowball effect is concerned.
And I would say if your budget allows for it and you can buy more, like if it does come down a bit late
Hmm.
October into November, go heavier during those weeks. Um, Thanks for tuning in, Raul. I'll check out your latest video. Triple
Shout
G.
out to Stocks for Bro. Triple G, welcome in. It's the Bank Bro, welcome in. Coca-Cola just paid you. I know that's right. I need to double check and see how much I got from my Coca-Cola dividend. I saw the notification. I didn't even look at it.
Okay, so last on our list, I think today, yes, Berkshire Hathaway. Something I never really look at this investment at all, Prez, to tell you the truth.
I just recently started looking at it, but it
Hmm.
doesn't pay a dividend. However, it is a pretty steady increase as far as share appreciation. So I look at Berkshire Hathaway as a growth type of investment because they don't pay a dividend. So it's a good long-term investment if you plan on like selling some of your shares at a much later date, like 10, 15 years down the road. You take profit on your shares and you reinvest them once you get a pullback in the market or a bear market or something like that. So that's how I look at Berkshire Hathaway. As you can see, the 52-week low was $330. 52-week high was 484.82. Now, as far as we already know they don't pay a dividend, but it's currently at fair value. It's a pretty fair value company, so I would enter it now if I, so choose. But I would be expecting to potentially add more to my investment. Go heavier on the pullbacks once it falls to undervalued.
Okay, so yeah, this company has a major stake in Apple. So
And
another
Coca-Cola.
company. Oh, okay, two companies that we've already talked about today,
Coca-Cola,
and
Chevron, it's another one, Occidental Petroleum.
mhm,
He just recently bought into what's that, Sirius XM, right before
yes,
they did their company merger. It's another one he's invested into. Activision Blizzard. I remember him buying a large stick in that during the previous bear market. And that's a technology company that has been working with Microsoft. So he got his hands in a lot of different investments.
yeah. So as Prez mentioned, there's no dividend here, but that's probably because Warren Buffett prioritizes reinvestment of earnings for long-term growth and not on board with paying out those dividends to the investors. Though he's
Mhm.
receiving so much from the two companies that we
Billions of
covered
dollars.
from Apple and Coca-Cola, for example. I'm sure there's many others, but we already talked about those two today. So, what else do we have? We have the 5-year performance.
Currently up 118% over the last 5 years. So
Mhm.
buying into Berkshire Hathaway is basically you're betting on Warren Buffett to continue to be one of the most successful long-term investors on this God's green earth.
All right. So, is there anything else you want to share, like as far as a rundown of where you would rank these particular investments before I talk any more about any my thoughts?
Now, as far as that varies as to what's already in my portfolio.
Hmm.
And that ties into each investor's own personal preference. Like I can say I like this at level 2 of my portfolio, all day long, but you may not like it at level 2. You might like it at level 3 or 4. You understand what I'm saying? So that all ties into your own personal preference. How would you like to diversify your portfolio? Do you want to be majority technology? If you do, just expect when the technology sector as a whole pulls back, that it's going to dramatically pull down your portfolio. Um, I also look at our the healthcare sector, because technology and healthcare, they almost run hand in hand, but they also need energy to power their businesses. So those are the main three sectors that I look at, and I base that off of what's currently trending as far as how the direction of what the world is doing, the direction the world is going. Like we notice we're going into more of artificial intelligence and more mechanical workers instead of human workers. So I lean more into the technology sector. I just know that it's the most volatile sector right now. So I have to mentally prepare myself for those type of pullbacks. But to combat that, to add more diversification, I lean more into the other sectors to try to balance out my portfolio.
Okay. So is there anything out of the five that we looked at, what would
Mhm.
be your risk tolerance? Do you think that any of these are risky and for anyone to have in their portfolio, that it would be like
Um,
kind of a not set it and forget it thing for them?
all of them would be in between. They will vary in between level 2 and level 3, depending on how many companies you have in your portfolio. Let's go with you just have 5 companies in your portfolio, VTI being number one. So you can have either one of these five at about 20% of your portfolio, whether it be Berkshire, whether it be Apple, whether it be Oracle, whether it be Walmart. Any one of those could easily fit on level 2 or level 3, whether it only be 10% of your portfolio. So that depends on your own personal preference and how many companies that you decide to hold in your portfolio. Sometimes less is better, sometimes more is better. It's not a one size fit all shoe. You have to constantly manage your portfolio when you decide you want to dabble into individual companies versus just holding one ETF. The thing about holding one ETF, the only downside about just being 100% into an ETF is you give up your voting rights as far as being a shareholder in these individual companies, because you pretty much give those voting rights to the asset manager, whether it be Vanguard, whether it be Charles Schwab, whoever is the fund manager for that particular ETF. So it's all up to you at the end of the day, your personal preference.
Yeah. So yeah, as I said, I never really looked at Berkshire, never had an interest in investing into it, but I think it could be an asset to a portfolio because it gives diversification with exposure to insurance and railroads and different things that um, just like an ETF that
Mhm.
gives you that simplicity by making that choice for your investment. So, yeah, I think it's a matter of um, what your risk tolerance is, as I was just asking Prez, and then where your priorities are. Is it growth? Is it steady income? Or is it
Mhm.
that feeling of stability and not having to pretty much be, if you're more going to be a more hands-off investor, that you're not going to be constantly um, uh, monitoring and checking up on the news and you know so that's how
Mhm.
you have to look at things when you're deciding what you're going to add to your portfolio. So are there any options trading next show? Someone wants an option show for us. Vinny
I'm
is
actually
pressing.
working on a members only video with a options course. I got to put a lot. I have to put a lot of work into that because that's just not something I can just explain in a little bit of time. It may even be a lengthy type of video, but I'm working on it. I really want to take my time and add a lot of. I don't want to leave anything out because it's a lot that comes with options. That's a whole different animal.
Yeah, it is. I will never, I don't think I'll ever, I'm not even going to go there. I don't think I'll ever attempt to teach options. I do options trade. I have been doing it more than usual over the last 2 months. And I do, as long as I have the time in the mornings, I'm going to continue to try to scale up my options trading.
Mm-hmm.
I would love to have a stretch where, you know, I'm able to generate. I was talking to someone just this morning, like $300 a day was the number that we were having the conversation about. But yeah,
Mm-hmm.
I'm nowhere near there. But it's also it's partly because of you know, my confidence in scaling up the trades, as I'm
Right.
saying. But don't take getting into options lightly. You know, there Keenan, Chris Sane, there are some YouTubers, larger YouTubers that do have been giving out some plays within their regular. They have discords, but they also have been giving out some plays during their regular videos. But
Mm-hmm.
you have to have some knowledge before you just jump in. The information that you're getting on YouTube, I do not feel is enough. You need to take a course. You need to understand so many more aspects, as well as knowing how to quickly navigate putting on your stop loss and making that decision as soon as you get into a trade.
Mm-hmm.
So that's just my little spiel, because I think a lot of people are hearing about options and they think that that's the way, but I think you need to take it slow, because if you jump in without any knowledge, you can lose a lot by just thinking, oh, I'll just hold it. I just get it. I don't, you have to have a total plan from the start. So, okay. So now we're going to go through um, seven tools that we incorporate in order to make the decisions on the things that we were just talking about. So I'm going to go
Mm-hmm.
ahead and remove this for a little bit. Let me go back to the beginning. Uh, let's see.
I
All
may
right.
end up doing I may have, end up just never mind the video and do my like options lessons live on my members only tab. I may end up doing it like that so that I can get feedback from the viewers, what as though they can ask me questions in real time, and others can see me put the questions up on the screen as watching the replay and things of that nature. So I may do it more like that. I may lean to do it more like that. It just takes a lot of work. That's the only reason why I would much prefer doing it as members only, because it takes a lot of work. Because I don't want to tell you anything wrong. I don't want to tell you anything wrong, and I don't want to leave anything out.
Okay. All right. Let's see. 13. So, guys, if you haven't already, make sure to give us a thumbs up. If you're watching, let me drop. If you're watching from my side, I'm going to drop Prez's channel link in the chat. If you're watching from Prez's side, come over and subscribe to my channel after the live. And let's take a look. Thank you for tuning in, Charlene. Let's take a look. All right, so we're going to run through 7 tools that we use in order to do our research on a regular basis. Not necessarily to do our research. 7 tools that we use in order to help us on our investing journey and do our research. How would you put this, Prez? I don't think I'm explaining it well.
7 tools we use to become better investors.
Better investors.
Yeah, better
Okay.
investors. Because you
It's
always want to strive to get better. Like, I don't know it all at the end of the day. I'm still learning. So I always try to do some type of research or try to acquire a new skill, a new tool, or I try to learn something new every day, basically.
Yeah, yeah. All right. So that's the name of today's show, Essential Tools to Become a Better Investor. So, number one that I have here is that income, because that's what's going to allow you to be able to invest. So, what do you want to share on this point, Press?
You gotta fund the machine. You gotta put money in the machine so that it can create more money for you. You have to. So what I would do is what I'm actually doing now, I'm creating as many streams of income as honest as I possibly can do it. You understand what I'm saying? Because all money ain't good money at the end of the day. I will never sell my soul for $1, contrary to popular belief. Um, as many streams of income as you possibly can, whether it be overtime, whether it be a second job, a part-time job, whether it be a side hustle, preferably some sort of side hustle, so you don't have to necessarily work up a extra shift worth of sweat to get these funds, but you're going to need these funds to put in this machine so that your dollars can make more dollars for you. You don't
Yes.
need a set amount. I mean, you don't need a lot of money to get started, but the more money, the merrier.
Hmm. Yes, definitely. And any little thing you can do. Obviously, we all know you can pick up a part-time job, but we
Mm-hmm.
have to be mindful, like we were talking about the other day, like whether it's, getting rewards for gas, tapping into different points and things like that with your credit card rewards, different apps that you can use, scan those receipts. It all that little bit, I'll take it, because you have to do the things that you're like. I use Rakuten. These are things I'm gonna be doing anyways. I'm gonna have to buy some clothes. I'm gonna have to buy some, I'm gonna do a curbside pickup from Target, but might as well stack these things together and then get a little bit of cash back, get some points that I can then use to redeem for a gift card or something. It's just something extra that you're receiving on something that you were going to do anyways. All right.
Mm-hmm.
So if you know what I'm saying. So, all right, let's go on to point number two, investing websites. And while we were going through the companies that we reviewed at the top of the show, we were using screenshots from investing platforms that we both use on a regular basis. I have portfolios on. I have my growth portfolio over on Weeble. I have primarily my dividend portfolio on Moomoo, and then I have a challenge that I've been doing on Public. That's where I do my $10 daily into VTI. So, Prez, what is the what what do you have to share about investing websites, as well as the sites that you use in order to do research, like Yahoo Finance, Benzinga? Like, what are
Mm-hmm.
some of your favorites?
I use them all. Like I don't have one particular favorite. I
Mhm.
use them all. They're all free, and I need different multiple media sources when it comes to a news catalyst or something like that. I don't want to depend on just one particular news catalyst because it could end up being fake news or something like that. That's the main thing I'm worried about. Is this fake news or is this a reliable source? So I bounce through multiple different ones, whether it be Yahoo Finance, whether it be CNBC, because I want to know what's going on with the pre-market data, or the I want to know how the treasury yields are doing or how the commodity sector is doing, like gold and silver and oil and things like that, because those affect the overall day-to-day intraday trading price action of your major indices. So those are tools that I use as far as trading, and I use Yahoo Finance to gather news catalyst data as far as potential new investments or investments that I currently own. Like this company is coming out with a new product. More than likely, I'm going to get a notification from Yahoo Finance that Apple is unveiling a new iPhone, or they have an investor convention coming up or something like that. So I use these different websites, whether it be tip ranks, but I do have a favorite, calculator.net. That is my all-time favorite as far as websites that I use, because it helps me plan out my future as far as how long is it going to take me to reach my financial goals, as far as how much I need to have invested, how much into dividend companies, whether it be growth companies. So I start with the investment calculator to map out my current investing amount that I'm able to invest regularly, and I use the investment calculator, and we already know we get an average annual return of 10% from the S&P. So I just enter the numbers into, and then I hit calculate, and it gives me a time period as to when I can achieve the goals that I need to achieve as far as how much I should have invested. off of this set amount that I'm able to invest regularly.
Okay, so these are some of the financial functions of the calculator that Prez is talking about. I'm not sure if I listed this in the description, but I will go back and do that if I haven't. And I recently listed up on my community wall the investment calculator because I think that's everything that everyone should take some time and put some numbers in if you are in the process of goal setting so
Hmm.
that you can just see what your investment can do for you over time because that compound interest is amazing and it's one thing to see it in the calculator, but make your plan, stay committed to it, and just take it month by month, year by year, and really take a look at what you're able to accomplish.
This is the first thing, the first tool that I use, the first tool that I learned how to use. So if I was to be starting today, this would be the first tool I'm using. I will sit down and figure out how much am I able to comfortably invest on a weekly, monthly, basis, and just play with the numbers at that point. I will write it down on a piece of paper. I need to invest $20 a day for 30 years, and I'll achieve my goal. And then I look at how can I shorten this time? It's going to take me 30 years. What can I do to generate more income so that I can do this in 20 years, or how can I do this in 15 years? Each year I'm trying to produce more income to shorten this time period.
Yeah, guys, listen, we keep it real over here. It's not going to happen overnight. It's
Right.
not going to happen overnight. We want you to look at the big picture. If some fluke thing happens and you go to the corner store and hit $1 million on the scratch off, that's one thing. But let's not
Hmm.
bet on that. Let's make a real goal for ourselves and stay committed to it. And in time, you can achieve those hundreds of thousands of dollars into your retirement account, or even
Hmm.
1 million, but start as early as possible and stay consistent with it and be mindful of the performance. You can't be out here getting a 4% return on your investments. We have to know what we're doing, and but it is achievable. But
Hmm.
like I said, me and Prez, we keep it real. I love how you said $30 on 30 years.
Right.
So that I,
I'm going off of the numbers that I entered in when I first
when you first got started.
mapped out my, did my goal setting. I did the goal setting first because after doing my research, reading books, listening to lectures and things like that, you want to know your exit plan before you even enter. So I went off of my age. What age do I want to retire? How long do I plan on? How long am I physically able to work without, having to start missing time from work because due to health reasons? And I got some work to do. Once I mapped it all out, what I can able to comfortably invest at my current income level, I know I have some work to do. So what am I doing? I'm trying to create more streams of income because I don't want it to take that long. Like I may not be here that long. So I'm going to try my best to create as many streams of income honestly as I possibly can so that I can shorten this time. And I just want to add, I don't want to deter anyone away from trading, but imagine if you had 95% of your investments into long-term investments in the good companies and the other 5% you're trading with. When you're getting in and out of trades, your emotions are not going to be in it, whereas though you can you're much able to cut your losses early versus you're depending on this trading account to bring you to financial freedom.
Mhm. Yeah, I want to get deeper into this, but I want to say something. Retirement is not an age.
Hmm.
Retirement is the amount of that investment portfolio.
Hmm.
So, but as I said, I want to get deeper into that another day because, we don't have to think that we have to, as you always say, work until we're 1 foot in the, where.
Right.
So let's just quickly finish going through our points. Now we're on to point number 3. Studying successful investors. Now, we already talked about Berkshire V today. What do you have to share on this point, Prez?
Could you repeat that, please?
Studying successful investors, point number 3 in our powerful tools.
Yes, yes, yes. For example, Warren Buffett. Like I study his moves. Like I don't necessarily have to like these people per se personally, but I admire their thought process. I admire a lot of the decisions that they made over time, as far, especially Warren Buffett, because I'm a firm believer in slow and steady wins the race, and finding companies that are good companies that are undervalued and buying them when they're undervalued versus buying them when you hear Nvidia is up 30% year to date. You want to buy it when ain't nobody else talking about it, when it's beat down, especially if you know it's a good company. So I study the minds of those greats. I read different books. I listen to different lectures. Like I listen to Warren Buffett's annual shareholder meeting. I catch myself, if I don't catch it when it comes out, then I'll find a replay and listen to that. Sometimes more than once, because you never know what this person is gonna say in code that you have to decode that can potentially help you or propel you into more success.
Okay, okay. Yeah, I don't know if this is a separate point about being in communities. Is that a separate point that we
Yes, it
had
is.
listed? It is? Okay. So, yeah, I think that we need to shift our mindset if we're not there already and know
Mhm.
that um, investing it should be a priority. The wealthy, the most wealthy, they invest, they have real estate, they this was it's not this was always going to be a part of their wealth building strategy and plan. And
Mhm.
I think that a lot of people are not are just starting out, and they're just of the mindset of work, get a paycheck, and spend, and not thinking about how to make their money grow. So I think that I want to instill in everyone around me and in whatever community that I am able to reach that wealth building is should be a priority within your life and teaching your children. And investing is a key way in doing that. However you invest, starting a business, having real estate, but I think that that all needs to be paired with investing in the stock market. So, in some way, shape, or form, should be an
Mhm.
element to everyone's wealth building strategy. Okay, so now on to point number 4, user-friendly mobile apps. Yes, I'm so glad that in today's day and age that investing is at our fingertips for everyone. All the research
Mhm.
tools are right there for us. So um, I've already shared what websites I use on a regular basis. Now, my retirement, I don't think I've touched on that today. I do all of my retirement accounts, and my daughter's accounts are over at Fidelity. But I'm a person that, as I said, retirement for me is not an age, it's a number. I'm just working to build up my portfolios. And when I have enough investments to live off of, that's what matters to me. So, Prez, what do you want to share about apps that you use? I know that both of us, when we do our options trades, I do my options trades off of the phone. Do you ever do
Mhm.
it off of the computer? I'm always
Never.
never.
Never. I
I put
just
my
need
cell
that
phone.
fingertip control. I need it
Mhm.
in real time. So as the like I say, you have fast fingers. Like I need to have fast fingers when it comes to getting in and out of a trade. Or even buying, buying a fractional share of a company. Like I need to actually physically do it versus me a click of a mouse.
Yes. Yes. I even have my daughter, she did her investments off of the phone. We do everything off of the phone as far as investing. Anything else you want to share on apps and monitoring, anything like that?
You definitely want to use apps that are user friendly, because especially if you're new, because I know it looks like Chinese to you, especially you see certain diagrams or screenshots on the screen. Like, how does he know what he's looking at and things like that? Like, there are plenty of different multiple apps that you can. You don't necessarily have to have, buy stocks on all of these different apps. You can just buy your stocks on one app, or one brokerage account, or two or so, what have you. But it's good to use these different apps for the different free tools versus, some of these brokerage you may use, they want you to get the premium plan so that you can get the analyst ratings. Well, you can just jump over to a whole different app and get those same analyst ratings for free, and then go and make your purchase on your main app that's trying to get you to upgrade to a premium member, and you paying $5 a month for what? You're
Yeah.
not worried about what the analysts have to say all the time, but it's good to know what they have to say all the time.
Yeah, I don't pay any additional subscriptions for anything like that. And I feel like I have access to a lot of resources, and just like what we were sharing through Webull, through Mumu,
Hmm.
um, lots of different calculators and calendars and information. And, when it comes to news on individual stocks, I happen to like the public investing app. When I put in an
Hmm.
individual stock and I go down to the news tab, all of the articles that they have linked there. That's one of my
Hmm.
favorite places to go to look for current news articles when it comes to those individual stocks.
I'm
Um,
guilty of having almost all of the premium plans. And that's something that when I really stepped outside and reevaluated where my money was going, I'm like, well, why don't I have more money to invest? And then I went through all of my subscriptions. I'm like, wow, I got a Robinhood Gold membership, and I don't really use Robinhood like that. I got this premium member, I got level 2 data coming from this app and that app. So I had to really, well, where can I get this same information for free from? So that's when I started downloading all of the different multiple apps and, taking my time and, getting friendly with these apps because they really are user friendly.
okay. All right, so guys, let's try to get through our last 3 points, Prez. Staying informed with the news. We've been touching on that already. Um,
Hmm.
you know, for my investments, like right now, I'm not holding any shares of anything as a trade. Everything I'm holding is as an investment. I don't have any stop losses on my Apple or Google or Microsoft or anything that I have in my portfolio. I'm only
Hmm.
using a stop loss when I am doing options trades. And so, what do you think? What makes you stay informed with the news? What are you looking for in the news, other than bringing it to us through your recorded content and stuff? You personally, what would you say that our viewers might look for in the news in order to help them on their investing journey?
What I'm looking for is where we are in the market cycle, and as far as economically, like how is the health of the current economy. It lets me know whether I need to adjust my budget. Do I need to tighten things up, or can I loosen things up to maybe have a little bit more entertainment versus less entertainment, and being all strictly by the book, paying the bills and trying to save every penny because we're in a downtime in the economy and things of that nature. It lets me know how to plan out my whole entire life financially because I'm in tune as to what's going on economically, politically, geopolitically. I'm keeping in tune with everything that's going on. Like as we can see, we just had a dock worker strike. Well, what if you could have foreseen that coming, or had an inclination that it was going to happen? You could have potentially, tightened up on your budget because this could be a potential black swan event. It could have affected the entire world. You understand what I'm saying? So whereas though, well, we're in a downtime economically, I'm doing better as far as tightening up my budget. I'm able to invest more because the market is going to crash. So my whole thing, I'm trying to be prepared for when the market crashes so that I can load the boat on these great companies whenever the market crashes. That's what I'm looking for. When is the
Yeah.
market going to crash so I can buy the dip?
Yep, sounds good to me. Be prepared, not surprised. Okay,
Hmm.
so point six is um, Chat GPT and
Yeah.
other, you know, Gemini, whatever you're using. So, Prez, I think I use this a lot more than you.
Hmm.
I even use it to. It wrote the title for today's show.
Right.
So I use it in different ways than you. But what do you want to share as related to investing in our investing journeys?
The world is moving into the artificial intelligence space. Use it to your advantage. You don't understand how to, the company description, copy and paste, enter it all into ChatGPT and tell it to break it down to you as if you were 5, as if you were 12. It's gonna break it down to you. I even when it first, when I first started learning how to use it, I said, well, how can I explain how Bitcoin works to my 9-year-old? I entered that into the ChatGPT and it told me, and I just pulled my son over and I read it off to him. This is what Bitcoin is, or this is what it means. This is what compound interest is, and all, it will break it down to you. So that's your artificial intelligence teacher. Use it to help you.
Excuse me. All right. And on to our last point of the day, social media and investing communities. Now, you guys are tuning in to a Sunday afternoon live stream about investing. So I think you guys will understand what we mean by this. It's good to submerge yourself with whatever you're trying to do around
Mm-hmm.
like-minded people that are going to talk about the things that you want to fill your spirit with. So, Prez,
Mm-hmm.
why did you add this to why is this our last point of the day? Why is this something that resonated with you?
All we got is us at the end of the day. It's us versus the corporations and the politicians at the end of the day. As you can see, unless you've been living underneath of a rock as to where the direction this world is currently going, we have to pull together more and put a lot of these differences aside and use each other to help each other grow as far as learning and knowledge, because they didn't teach us in school, teach us this in school, and they probably never will at the end of the day. So you take the good out of every content creator that you possibly can. You don't necessarily have to follow everything that everyone does. I encourage you to learn how to research a company on your own, learn how to make these decisions on your own. But it's always good to bounce ideas off of another person's head, or you get ideas from someone else. You don't necessarily have to pull the trigger on it, but it's always good to get an idea. Like, for example, someone looking at the company Oracle. I don't know much about it, so now I want to know. So I've made a note of it. When I end the stream or I get some free time, I'm gonna go and look into this company. Will I buy it? Maybe not. Maybe I will. You understand what I'm saying? So it's always good to be in different investing communities, trading communities, whether it be free or paid. There are free communities out here. There's plenty of free content. You don't necessarily have to pay for something, but be careful for the ones that you do pay for at the end of the day.
Okay. All right. Okay, so I think this was a great show for us, guys. If you
Mm-hmm.
have any, if you want us to do a segment similar to how we started off today's show, at the top of the show, we were taking a look at some key points related to Walmart, Apple, Oracle, Coca-Cola, and Berkshire Hathaway. So if you have any stocks that you might want us to do in the future, leave us a comment on our videos. Make sure to hit the notification bell. And we're probably going to be having some changes upcoming to our Sunday schedule.
Mm-hmm.
Um, so be on the lookout for that. But I will try to keep you updated on my community page as to when our live streams will be. But Prez has a new job, so congratulations to you on that, Prez.
Thank you.
So our schedule is going to have to change, but we've had a nice stretch of over 30 shows this year,
Yeah.
in this time slot. But things have to change a little bit, but we will be continuing. We're going to try to figure out a time for us to continue to have a show together.
Mm-hmm.
All right. So I just dropped Miss Frugal's channel link on my side. She's getting really close to 500 subscribers. So, guys, check out a video over there. If you like what you see, consider subscribing to her channel. Thank you to Joe, Miss Frugal, everyone who's tuned in today. Thank you for being in the chat, Miss D Bankroll. Thanks for everyone who engages, hits those YouTube emojis, tunes in every week, shares us out. I didn't even check to
Mm-hmm.
see who shared us this week, but Let me take a look at that. Did we get any shares? Let's see, mentions.
Yeah, brk-b has been producing great returns. Like, don't even hear many people talking about it. It's just been trending upwards like since forever.
Yes. Thank you, Charlene, for sharing out the live stream. So I today is my braids appointment, so I have to get going because I'm going to be sitting over there for the rest of the night. Um, but I'm glad that we got our show in. And as I said, we're not 100% sure what time it will be going forward, but we'll keep you updated. Anything
Mhm.
else you want to, yes, congratulations,
Thanks
Press.
for the congratulations. It's been a rough journey. It's been a rough journey this past year, but it's no way to go up from. It's no way to go from here but up. It's like I have a plan written down, and I've been sticking to it. Like even when I have little hiccups along the way, as far as when life happens, I've been sticking to this plan. So I'll keep you guys updated on this journey. Thank you all for riding along with me.
Okay, so we'll see you live again on Wednesday on your channel?
Yes.
Yes, all right.
Well, we're gonna play it by ear. I'm gonna try to be live Wednesday. I'm not
Okay,
sure this week, but definitely the following week.
okay. But like I said, hit that notification bell and so that you can keep updated with all our recorded content, live streams, all of that. Yes, congratulations. And guys, it's breast cancer awareness month. And I have one more slide that I wanted to share too. It is breast cancer awareness month. And I just wanted to recognize that and give you guys encouragement to know your risk. And everyone's risk level is different. Know your risks, make sure you're keeping up with your appointments, and even if you're not close with your family members, share that family medical history so that if there is anything that your doctor should be aware of, they know and they can then as I said, treat you at the risk level that you truly are. And hopefully, if anything does occur, they catch it early. Um, I know it's an issue on both sides of my family. So it is something that is always a priority to me. And I've incorporated doing my mammograms I think I started at 29 years old, where I think the standard at the time was 40 years old. So you have to know your risk and just be mindful and get out there and advocate for yourself. So one last screen before we wrap it up. I'm running so late, but I had this there. I posted to my community wall a list of all the notable earnings for October. So you can take a look at that. But I highlighted Thursday and Friday for this week. You can see the notable earnings here. And then we're having CPI report on Thursday and PPI report on Friday. So those are things that can impact the stock market. All right, Press, I need to wrap it up. Thank you for another great show. Good luck to you on starting your new job, and I will talk to you soon. Any closing
All right.
words?
All right. No. If you don't find
No?
a way to make money while you sleep, you will work until you die.
Okay, guys, have a good rest of your weekend.